The Peter Schiff Show.
Today's podcast is sponsored by Mint Mobile. Get your new customer offer and your new 3-month unlimited wireless plan for just $15 a month at mintmobile.com/gold. Additional taxes, fees, and restrictions apply. See Mint Mobile for details. We had quite a day and quite a week. Economic data, the markets, and I guess I could say I told you so if you watched or listened to my podcast that I did on Friday of last week, because during that podcast, I pretty much predicted what we saw this week. I put my finger on the strength of the Japanese yen and what that potentially foretold for risk assets. I pointed to the continuing preponderance of weak economic data, and I pointed out the emerging trend that I had noticed where investors were rotating out of growth and into value. And I postulated last week that it looked to me like investors were now finally starting to price out the soft landing, and they were starting to price in a harder landing. And I also warned that if Jerome Powell didn't take advantage of the September meeting, which we just had a couple days ago, to cut rates, and I suggested a 50 basis point rate cut to be preemptive on what I saw was the potential for a market crash. I said on last week's podcast that if the Fed didn't cut by maybe 50 basis points on its next meeting, that it risked a stock market crash if it even waited till September. And I said that the recession would officially begin then with a stock market crash. Now, of course, we've been in a recession all year, maybe even longer. And I believe the government will eventually, after this election in November, they will revise over a year's worth of economic data, and they will then backdate the recession to sometime before 2024 began. Now, when I said that I thought Powell should have moved this week, it wasn't because that's the right thing to do. Of course, it's the wrong thing to do. The Fed's never going to do the right thing. What I was saying was that if Powell's goal was to really help the economy, make it more likely that Harris is elected, right, to continue the current administration, and try to, kick the can down the road, try to prop things up for a little longer. If that's what the goal was, I thought he should have taken advantage of that move to help the markets and to at least, look like they know what they're doing. Of course, they don't know what they're doing, but had Powell taken my advice, which he didn't, that I will get to that, in a bit in the podcast, but he would look extremely smart right now as far as the conventional wisdom is concerned, had he done that in light of the economic data that came out today, which was a bombshell for the markets, but it didn't have the result that a lot of people would have thought. It wasn't bad news is good news because it means there's going to be a rate cut. It's bad news is bad news because it means the Fed waited too long to cut rates and we're going to get a hard landing. So the lower interest rates aren't going to be a savior. It may provide some cushion for the decline, but if the Fed did wait too late and it's behind the curve, which is what the people will think, then even though we get lower interest rates, we're going to get lower earnings. And so that's going to really hit hard the growth stocks. And exactly what I said happened this week. The markets, first of all, got clobbered today, one of the biggest sell-offs we've seen in a while. The Dow Jones was almost down 1,000 points at the lows, but it paired a lot of those losses, and it closed down about 600, a little over 600 points. So that 600-point drop represented a 1.2% decline in the Dow on the day. And that was the strongest of the major indexes. Again, the rotation out of growth into value continued in earnest this week, as I forecast it would last week. So the Dow was down 1.5% on the week. So pretty much almost all those declines coming on Friday. And the Dow is now down 4.5% from its all-time record high that it just recently hit. The S&P fared a bit worse because it has some more growth stocks in it. It was down 1.84% on the day and 2.2% on the week. And the S&P is now sitting 5.5% from its high. Not that big a drop. Now, look at the NASDAQ composite. Got crushed, down 2.4% today, down 3.8% on the week. We're now down better than 10% from the record high that it just set. So that's full-blown correction territory for the NASDAQ. The Russell 2000, which had a couple of really good days recently, is almost as bad. It was the weakest index for the day and the week. It was down 3.5% today, 6.8% on the week. So we're now down almost 9% from the record, or not a record high, but the 52-week high for the Russell 2000, which again was just set. Now, gold did much better on the week, even though it was down today. I mean, at one point it was up, $24, $25. It looked like it was going to make another all-time record high. It was less than $10 away from a new all-time record high. And when it couldn't make a new all-time record high, it sold off. Now, I think that's temporary. I expect gold to hit a new all-time record high next week. We'll see if I'm right again, the way I was last week. But when gold turned around, and even though it was positive on the week, right, gold was up 2% on the week, and it was barely down today. It was only down a few dollars. I mean, it went up 20, down 20, and then it recovered, and it closed just slightly negative. So gold held up very, very well. But the gold stocks got clobbered today. Although earlier this morning, many of the big names that I own personally, that we own in the fund, Newmont Mining, Agnico Eagle Mining, Kinross, a few others, made new 52-week highs this morning, and then they ended up closing negative. I don't think these are significant or key reversals. I think you have a great opportunity to buy this dip into gold stocks. In fact, given how much the stock market was down, they held up. And in fact, the gold stocks were not down as much as the NASDAQ today. Normally, or it has been recently on these big down days when the NASDAQ gets killed, a lot of the gold stocks get killed even more. But the GDX was only down 2.2% on the day, and it still finished positive almost 1% on the week. So gold stocks are looking really good. I think they were a great buy today. In fact, I posted that on X that people should take advantage. We still don't have nearly enough bullishness on gold. It really is incredible. I looked at the earnings that came out a couple of days ago from Gold Money. I don't really have a position in the company anymore because I got rid of it to buy Shift Gold back. But I did look at the earnings because they came out with better than expected earnings. Stock was up about 10% from a really beaten down level. And so it popped on these earnings. And I wanted to know, well, why? Why were the earnings good? Because, the gold business, I have Shift Gold. I mean, it was okay for us. And so I wanted to look at it. And the reason they earned more money than people thought was because so many of their customers dumped their gold. They lost about 2% of the gold they had in custody. About $24 million worth of gold was sold by their customers, even though gold was up 4.5% on the quarter, which isn't bad. That annualizes out to 20%, yet their customers are selling their gold. Now, Gold Money makes a commission when they sell. So since there was a lot of selling, they made more commissions. But I mean, that's not what you really want to see. You want to see buying, because now you're getting new customers. They're sending more money. You get custody, storage fees. And when a customer buys, then that's a future sell commission that you can get. But when they sell, that doesn't guarantee a future buy because they take their money and they go someplace else. Now, it's possible some of the people that sold gold at Gold Money went and rebought it someplace else if they're just not satisfied with Gold Money. So it's hard to say for sure. But the fact that Gold Money isn't selling a lot of gold, the fact that Shift Gold isn't selling a lot of gold, the fact that nobody is selling a lot of gold just shows you how ridiculous this is.
this is the most unloved gold bull market that I've ever seen. And, the fundamentals have never been better, yet the investors, they've been burned so many times waiting for a gold rally that hasn't happened. Now they're like, okay, it's like the boy who cried wolf. It doesn't matter how good the numbers look. I'm not buying it, right? So it's going to take a huge rally in the price of gold to get people bullish. Now, fortunately, we're going to get a huge rally in the price of gold, and it's coming really soon. Also, I think we're going to see a big drop in the dollar. The dollar was down, dollar index down 1% on the week. It was down 1.2% today. And so basically the entire decline in the dollar index happened today because until today it was up. But it was led lower by a surging Japanese yen. Japanese yen, I mentioned at its low, the Japanese yen was over 161 to the dollar. You needed 161 Japanese yen to buy a dollar. As of the close on Friday, you only needed 146 and a half. You've had almost a 10% rise in the yen in a couple of weeks. Not quite, maybe 9%. That is a huge move in a very short period of time. And that's why you had this collapse in the Japanese stock market. They had one of their worst days in history. The Nikkei was down 5.8% overnight on the strength of the yen. Now, if you're a U.S. dollar investor, some of that was offset by the strong yen. In fact, on the week, the Japanese stock market was down 7.8% in yen. In dollars, it was only down 3.3%. So that's actually a smaller loss than the NASDAQ or the Russell 2000. So as bad as the Japanese stock market was, if you were an American and you own those stocks, then you didn't do so bad. Now, in fact, we actually owned, I saw one of my Japanese stocks was actually up 1 or 2% yesterday. So it was positive on the week in addition to the rise in the yen. But the interesting thing in yen terms was Bitcoin. And I talked a lot about Bitcoin in last week's podcast, right? It was almost the whole podcast after the introduction when I talked about, these economic and market signals, the tea leaves that I was reading correctly. I talked about Bitcoin. Bitcoin had a horrible week in dollars. I think it was down 9 or 10% in dollars. But in yen, it was down 14%. Just a couple of weeks ago, everybody was talking about, hey, the Japanese are buying Bitcoin. The Japanese are buying Bitcoin. They need a hedge against inflation in a weak yen. Well, they got crushed for buying Bitcoin. Anyone in Japan who bought Bitcoin has lost a lot more money than the people who just bought the stock market. Now, in yen terms, gold was down too, but only 2.5%. That's not a big deal. Right? If you lost 2.5% in your gold and you bought it as a hedge, as a safe haven, you're a happy camper. Because if you sold your stocks and bought gold, you sold stocks that went down 7.8%, and you bought gold that only went down 2.5%. You're ahead of the game. But if you were dumb enough to sell your stocks and buy Bitcoin, you're in much worse shape than the people who just wrote it out in the stock market. Now, I think the Japanese are going to say sayonara to their Bitcoin. I think you're going to see selling out of Japan. A lot more selling is coming. By the way, another thing that I got right, a lot of people were excited about Bitcoin because Donald Trump promised not to sell any of the Bitcoin that the U.S. government seized, right? They got a couple of $2 billion worth of Bitcoin. And Donald Trump said, when I'm president, I'm not going to sell it. Well, you know what? When he's president, assuming he wins, he's not going to be able to sell it because it's not going to be there. Because Biden or the Biden administration, because Biden doesn't really know what the hell's going on, but some of his people do, they will sell every last Satoshi before Trump has a chance to take office just to spite him. But I think they want to do it anyway. So I think it's going to get sold. So Trump is not going to be able to hold the Bitcoin. The Bitcoin are going to get dumped on the market before he gets sworn in. And he'll never buy any Bitcoin. He's not going to buy it. See, it's one thing not to sell what you have, but it's another thing to go into the market and buy new Bitcoin that you don't have. Trump never promised to do that, and I don't believe he ever will. And I know that, that senator from Wyoming introduced some bill to create a Bitcoin reserve. That's never going to happen. Bitcoin Again, down 10% on the week versus gold up 2%. The market has spoken, right? Gold is the winner, Bitcoin is the loser. And I think that is going to continue, that divergence next week. Anyway, a couple of stocks that I want to just highlight that were the big movers. Amazon, again, a retail bellwether, down 9% on the day, and that was off the lows. It was down more than 10% earlier. But the real bombshell du jour was Intel. Intel was down 26% on the close, but at its low point, it was down 33% in one day. Intel. I mean, this was the biggest drop in one day for Intel in over 50 years. That means for Intel shareholders, yesterday was worse than Black Monday in 1987. So think about that. Anyway, we're going to take a quick commercial break right now. And when I come back, I'm going to get to today's jobs report.
I love a great deal as much as the next guy, but it has to be easy. No hoops, no BS. So when Mint Mobile said it was easy to get wireless for $15 a month with the purchase of a 3-month plan, I called them on it. Turns out it really is that easy to get wireless for $15 a month. It's time to switch to Mint Mobile today and enjoy unlimited talk, text, and data for just $15 a month. In fact, when it was time to get my son Preston his own phone, Mint Mobile was the perfect choice. Forget about the steep monthly fees and overages that you get with your current wireless plan and make the switch to Mint Mobile's premium wireless plans, starting at just $15 a month. Choose any Mint Mobile plan, which includes high-speed data with unlimited talk and text on the nation's largest 5G network. You can even keep your current phone and number when you switch and bring over all your existing contracts. Ditch overpriced wireless with Mint Mobile's limited time deal and get 3 months of premium wireless service for $15 a month. To get this new customer offer and your new 3-month unlimited wireless plan for just $15 a month, go to mintmobile.com/gold. That's mintmobile.com/gold. Cut your wireless bill to $15 a month at mintmobile.com/gold. $45 upfront payment required, equivalent to $15 a month. New customers on the first 3-month plan only. Speed slower above 40 gigabytes on unlimited plans. Additional taxes, fees, and restrictions apply. See Mint Mobile for details.
Okay, so before I get to today's report, let me talk about the one that we got on Wednesday, which set the stage a little bit for the big report today, and that was the ADP private payrolls report. That was a miss. They were looking for 154,000 jobs created, and there were only 122,000 jobs. And it wasn't a huge miss, but it was a miss. But the real miss is the one that happened today with the official non-farm payroll report. They were looking for 180,000 jobs created. And that would have been a, decent decline from the 206,000 jobs that they told us were created the month before. Well, first of all, they revised down that 206,000 all the way down to 179,000, which is what they do almost every time there's been a jobs report. I think I've only seen one time that you've had an upward revision. Every other revision has been downward. So clearly, these are rigged, right? This is not random chance. This is by design. They give you a high number, and everybody looks at it. And then when no one's paying attention the following month because they're looking at a new number, they revise it down, right? So these numbers mean nothing. The number that we got today that was supposed to be 180,000 was 114,000, a huge miss. And I'm sure they're going to revise this number lower next month. Of course, all the numbers are going to get revised ultimately to much, much lower than they are now. But the big shocker was the unemployment rate, which spiked up. Nobody predicted this. Everybody thought the unemployment rate would either stay at 4.1 or drop to 4.0. It spiked up to 4.3%. This is a huge increase in the official unemployment rate and is an indication that the hard landing is coming. But to really put the unemployment rate in perspective, and I talked about this on a prior podcast not too long ago, you got to look at the U6 rate. And the U6 rate spiked up even more to 7.8%. Now, nobody talks about the U6 rate, and that's by design. That's why they created U3, so that people would forget about U6. But I mentioned on this podcast, U6 was created in 1994. Up until 1994, U6 was the number. So when they reported the unemployment rate in 1993, 1992, and every year before that, they reported what we now call U6 that nobody reports. So when anybody talks about how unemployment is low and they compare it to what unemployment was in the 70s or the 60s, it's apples to oranges. You can't make the comparison. The only way you can do it is the way I'm doing it. You have to compare the current U6 number to the old headline number, the official number. And even that is an apples to oranges, but it's closer because back then, U6 included all the disgruntled workers, no matter how long they've been disgruntled, right? Even if they've been, yeah, I haven't looked for work in 3 years because I'm so disgruntled, they still counted as unemployed. But now, after you've been disgruntled for a year, you drop out of the U6. So even these numbers are too low. But if you just take it at face value, today's U6 number, I look back, 7.8%. There wasn't a single year in the 52 years between 1942 and 1994, 52 years, not a single one of those years ended with an unemployment rate as high as the one we got right now. 52 years. Now, it was a little higher in 1940, 1941, because we were still in the Depression, right? So other than the Depression, the Great Depression, those 52 years, every president had lower unemployment than Biden. So how can he claim that he's got this really low unemployment? How can Powell say the economy is great because the unemployment rate is low, when if you look at the real unemployment rate, which still isn't real, U6, it's high. It is historically high. We have right now a historically weak labor market and high unemployment rate. And the inflation rate is also high, especially if you measure it the way we used to measure it in the 1970s. I would say that the misery index, which is the combination of unemployment and inflation, is higher right now than it was for the majority of the 1970s. Not the latter part. The Carter years were still a bit worse. But the earlier years with Ford and Nixon, it's worse now under Biden. And that was a stagflation a decade. So we've got it. The data supports it. And the markets investors are slowly starting to cue in. Looking at some of the other numbers, manufacturing added 1,000 jobs, no big deal. Last month, they lost 9,000 jobs, a little bit more than they first told us. Labor force participation did tick up to 62.7, but average hourly earnings only rose 0.2. They're supposed to rise 0.3. Year over year, they were up 3.6, so people not making as much. And the work week dropped from 34.3 hours to 34.2 hours. It was a very weak report. We also got a report on factory orders, which were down 3.3%. They were looking for a drop of 3%. So they were looking for a big drop, and they got a even bigger drop. But again, manufacturing is in recession. It's been in recession for almost the entirety of the Biden presidency. And you can see that, in the Intel earnings, or, what we saw with even Amazon is showing that the consumer is headed there. I think he's already in one. The ISM number that came out yesterday, ISM manufacturing, another big miss. They were looking for a weak number. They were looking for 48.8. They got a much weaker number, 46.8. The only thing that was strong was the prices paid. It was a hot inflation number. That's what spooked the markets when it came out yesterday, because we got a weak economic news and we got weak news earlier in the day. And then all of a sudden we got high inflation. Well, that's what we're going to get because we got stagflation. The economy is going to keep getting weaker and inflation is going to keep getting stronger. Construction spending, another drop. They were looking for a rise of 0.2. We got a decline of 0.3. Nobody expected a negative number. And in fact, they revised the prior month from down 0.1 to down 0.4. And what else did I look at? Dallas Fed manufacturing was supposed to be weak. It was supposed to be minus 13.5. It was weak, minus 17.5. Nobody thought it would be that weak. the weakest anybody thought in the consensus was 14.2. So we had a week of weak economic data capped off by an even a weaker jobs report. And now there's a lot of pressure on the Fed. Now a lot of people are talking about a 50 basis point rate cut in September. I was talking about it last week, and I thought they would do it potentially in July in the meeting we just had. I think they may end up having to do an emergency intra meeting cut of 50 basis points, which they'll look like complete fools if they have to do that. So believe me, they don't want to. They want to wait until September, but they may not be able to if the markets keep tanking, right? So they're going to have to do something, but they're going to have to, try to find a way to sugarcoat it. But they should have moved when I said, not because it was the right thing to do, but given that I know what they're trying to accomplish, they should have done it. They would have had, silenced some of their critics in the short run who don't really know enough to criticize them for the right thing anyway. Everybody thinks, oh, the Fed waited too long to cut. No, they waited too long to hike. In fact, they never should have cut. They never should have put rates at zero, but they did, and now they're in a very difficult situation. Oh, and one more thing before I get to the Fed meeting on the jobs report that I meant to mention was on the birth-death model. Now, as I said, the government claimed that 114,000 jobs in total were created in July. But that also includes the assumed jobs from the birth-death model, right? Now, there's some debate as to exactly what one assumed job actually equals when it gets into the real numbers. I don't know that it's one for one. I'm not really sure. But I know it has a significant impact. Obviously, if they assume a lot of jobs were created, that does something to increase the number. Whereas if they assumed a lot of jobs were lost, that would decrease the number. Well, the number of jobs that they assumed were created by businesses that they guess were started up, right? They don't even know that these businesses exist. They're assuming that they were created. That birth-death model was 256,000 jobs created. That's a huge number relative to the total number that they claim were created. Does it make any sense that if the businesses that already exist are barely hiring anybody or are laying people off, that you'd have all these new companies starting up in the same month, hiring all these people? Makes no sense at all. Again, they still think, the statisticians that are computing the birth-death model, they all think the economy is great. And so they assume that new businesses started up. If they actually realized how weak the economy was, they would assume that existing businesses are closing down. And so the birth-death model would be showing jobs or businesses dying, not being born. So these numbers are way, way off. Anyway, let me get to the press conference that we got. Again, so no movement at all on interest rates. Powell missed the opportunity to look like a genius in the minds of many by cutting rates in advance of this weak jobs report and this big stock market sell-off. In fact, had he cut rates, maybe the stock market wouldn't have had as big a sell-off. We'll see, but he didn't, and it did. But the most interesting thing this time about the press conference, to me, wasn't what was said. It was what wasn't said. There was no talk at all whatsoever. Nobody asked Powell, nor did Powell mention the national debt, which just a few days before this press conference rose above $35 trillion. That is the first time that that's happened. That's a big number. And yet it didn't even come up in conversation with the Fed. Nor did they talk about the balance sheet, which obviously relates to the national debt. That wasn't even mentioned. Nobody asked the Fed, and Powell didn't bring it up. He didn't discuss it. But, to put the national debt in perspective, so Joe Biden's been president for 4.5 years. And during those 4.5 years, we've added $7.2 trillion to the national debt. Now, he is on pace to beat Donald Trump and set a record for the most debt added by one president in a single term. Now, the record holder for most debt by any president is Barack Obama, but he had 8 years to run up the debt. Donald Trump only had 4, and so did Biden. So Biden's added more, or will add more in his 4. But there is an outside chance, depending on how quickly everything collapses, that Biden just may add more debt in his 1 term than Obama did in 2. I don't think that's going to happen, but it isn't outside the realm of possibility. But I do believe that regardless of the outcome of this election, whoever wins, and I'm thinking it's going to be Trump, but they're really selling Kamala Harris hard right now, right? All the people that said Biden was sharp as attack, now that she's the greatest thing since sliced bread, and the Republicans are just weird, right? There's no other way to describe them. They're just weird. Their ideas are weird. They're weird. That's pretty much the script that they're all reading from. It's just amazing that they keep doing this and the public buys it. But whoever wins, I think that president is going to beat the record of the prior administration as far as the amount of debt that's going to be added, because these records are going to keep being broken because we are on the verge of a debt crisis in the United States. And despite that, not a word. Nobody talked about it. Nobody asked about it, because, when we have a recession, we've never entered a recession with this much debt, not even close. So what are we going to do? With the budget deficits are so high. They're higher than they normally are during the recession. So imagine where they're going to go. This is uncharted, extremely dangerous territory. And nobody even wants to acknowledge it, right? Maybe the reason they don't want to discuss it is because they can't, because, there's no solution here. So let's just pretend it doesn't exist. So that was more significant to me, what they didn't talk about. But the main thing that Powell was really stressing was he's trying to walk this fine line between going too early and going too late. And, they just don't know what they're going to do, right? They're just dependent on the data, which to me is nonsense, because the data they use is meaningless. It's all rigged. It's always going to be revised. I mean, just see what's obvious. You don't have to wait for this ridiculous data to confirm what's obvious. That's why the Fed is always late, because, it's relying on meaningless data and closing its eyes to reality because it thinks this data is what should be guiding it, right? It's got a broken compass, and it's just following it. Look up, look at the stars, see where you're headed. But let me look at some of the other questions that were asked. Just a couple of them. I made some notes. One of the things he said is, when he talks about, the risks, and he said, well, if we do get an unexpected jump in unemployment, if the labor market unexpectedly weakens, which of course it's already weak, he just doesn't acknowledge that. But he said, look, rates are at 5.25. We got a long way to go. We got a lot of leeway to cut rates. We got a lot of, ammunition, right, in the barrel here. We can really fight a recession if we have to. He can't. What Powell doesn't realize is that he doesn't have all that room, because real rates are still negative when you take the actual inflation rate. But the reason that the Fed was able to go down to 0 before was because it had the cover of inflation being below its 2% target. And so that gave it an excuse to be able to print all this money, because they could say, look, we don't have enough inflation anyway. We're below target, so we can create more money. We could do QE, which is inflation. But if inflation is above 2%, how do you justify it? Now, I know he's going to say, well, we think we're on the glide path. Even though we're at 2.5, 3, we're pretty sure we're going to go down to 2. And so they're going to start cutting rates. But soon after they start cutting rates, inflation is going to go 3.5, 4. It's going to be going in the wrong direction. And that's going to stop the Fed from cutting rates further. They may not hike, which they should do, but it's going to stop the cuts dead in their tracks. So Powell doesn't have this big, runway that he thinks he has, because it's going to be short-circuited by a spike in inflation, which of course is the Fed's worst nightmare, stagflation, because then, they keep talking about their dual mandate. Which one do we focus on? Well, what if unemployment is high and inflation is high? They got to ignore one mandate. And again, I think the one they're going to ignore is inflation, and they're going to try to stimulate the economy and create jobs. But by creating inflation, it's actually going to backfire. The stimulus is going to be a sedative, and they're going to hurt the economy and destroy jobs while they're making inflation worse, right? So there's no way out of this. This is economic Armageddon, which is why I've been giving the investment advice that I have. And by the way, our strategies crushed it this week. Absolutely crushed it. I mean, not in real terms. It wasn't like a big gain. We had some gain, but we avoided huge losses. And it would have been even better had we had a rally in gold stocks today, which we didn't have. They were still up on the week. But the value stocks that we own dramatically outperform the growth stocks that we don't. So we have been underperforming all year, and now we've been outperforming. Now, thanks to this week, we've been outperforming for the last 3 months, and I think pretty soon, maybe by next week, we're number one. I think for the last 3 months, we're now outperforming year to date the benchmarks, and I think we're going to put even more distance between ourselves and the benchmarks next week if this trend continues, and I believe that it will. One of the most ridiculous answers I thought Powell gave is some of the reporters asked him, well, do you factor into your models? Because the Fed builds these economic models, these forecasting models of where they think the economy is going, unemployment, things like that, so they can kind of figure out, what they think they should do. And the reporter said, do you account for this election and who might win? I mean, do you have different scenarios? Like, what do we think is going to happen if Trump wins? And what do we think is going to happen if Biden wins? And his answer was no. He said, we don't care. It's irrelevant. We don't factor that into our models. So we're just going to make the same assumptions. And it doesn't matter to us, which, of course, is ridiculous. They need to have, a contingency plan. Okay, what if this guy wins? What do we think? And what if the other guy wins? I mean, what if one of the candidates was Bernie Sanders, or although I don't even know Kamala, she may even be to the left of Bernie Sanders. I mean, she was until they whitewashed the internet, so you can't find a lot of that stuff. But what if you have a candidate promising, $25 minimum wage? We're going to have free health care. We're going to have free subsidized housing for everybody. The government's going to give a job to all the unemployed. The deficit's going to skyrocket. How could you not model that? How could you not think that, with that type of reckless deficit spending, that, you think your assumptions about the economy are going to be different than if one candidate, I'm not saying that Trump is promising this, but what if some candidate's like, I'm going to balance the budget, I'm going to cut government spending, I'm going to, deregulate to create a more productive economy. I mean, obviously, those are diametrically opposed policies that are going to have very different impacts. The Fed has got to know that. I mean, they're not complete idiots. But they have to pretend, well, we don't care. Like we're indifferent. It's not going to matter who wins. Doesn't really matter what their policies are. We're just apolitical. They're trying their best not to talk about the policies and acknowledge that how bad some of them are in relation to others. He was also asked about all the government jobs that were being created and how the government jobs were a big part of the jobs that are being created, and if he sees a problem with that. And, he really skirted around it and said, again, he talked about, well, we'd like to see, more broad-based job growth. So if it's skewed in one particular, category, is problematic. But the bigger problem with government jobs, again, they're not productive and they run up the deficit. Private sector jobs add goods and services and are paid for by the profits that they help generate for their employers. Government jobs produce nothing and they're paid for by deficits, by inflation. So when you have a lot of government jobs, that is a very, very bad sign. We don't want these jobs. The actual solution to our problem is to eliminate a lot of these government jobs. We can't afford them. Not only can't we afford to pay the workers, but the workers themselves are making all the private sector workers less productive. So it's a twofer when you fire these government workers. A, they're no longer on the public dole, but B, you increase the productivity of everybody else. It's a win-win. And now the guy, the government worker, though, now he has to go get an honest job somewhere. So I guess for that person, it's a lose-loss. But for society, it's a win. Now, also, Powell was asked about a 50 basis point rate cut. Interesting. One person towards the end of the press conference said, have you thought about a 50 basis point cut? And he said, no, that's nothing we've been considering. We haven't been thinking about it. It's not in our model. It's not in our assumption. And then he kind of walked it back and said, look, we have no idea. We haven't even thought about anything, to maybe not completely take it off the table. But, I thought that one of the most telling aspects of it was a lot of people said, look, if you're going to cut rates in September, and he didn't promise a September rate cut, that's probably the problem. But he certainly implied that that's what the Fed is thinking. And like one of the reporters said, well, if you're going to cut in September, why not just cut now? Right? Like, why not get it done, right? Rather than wait until September. Just if you know you're going to cut, just cut, right? Which is true. If the Fed knows they're going to cut in September, then just cut, right? What's the point of waiting another meeting? And Powell said, well, we don't really have enough data yet. We're not really sure if inflation is really on track to come back down to 2%. So we just want to wait for more data, which is all BS. Because if they're not sure now, which of course they shouldn't be sure because it's not going to happen. But let's say they were being honest, right? And they really didn't think they had enough data to know for sure. Well, what's going to change is 6 weeks. A little more data, that can't possibly do it. The data can't be that far off. And in fact, the inflation data that they've gotten since that meeting announcement is actually worse than people thought. It's only the jobs number. Now, of course, he did open up that window. There's two reasons that he could cut. It's either because inflation comes down or unemployment goes up. So he's got the second one. He's got that other part of the mandate. He can cut because the economy is weakening, right? But when he said this, he was specifically talking about inflation. He says we want to make sure that we've got inflation licked. We want to make sure that it's headed to 2%. So we're going to wait until September to cut because by then we'll know, right? We're not really sure now, but we'll probably be sure then. Why? Why would they be sure? Of course, this is all a lie. It's all theater. The reason that he wants to wait is to pretend, right? To fool the markets into thinking that when he does cut, it's, oh my God, he's really sure now, right? They waited this long. They got that extra data. Oh, now they know for sure, right? Because he needs the markets to believe that inflation is going down because it's not going down. And the rate cuts are going to make sure it doesn't go down. They're going to fuel the inflation fire when the Fed starts cutting. So he has to kind of, soften the blow by waiting a long time and really building up the anticipation and to get people to think, yeah, they really thought long and hard. They really held their powder until they knew for sure that inflation was coming down, even though they have no idea. But they just feel that they could wait a little longer. But they shouldn't have. They overstayed that welcome. They should have done it based on their game plan. Again, it's not what they should do for the country. Whenever I talk about what the Fed does, it's what I think they're going to do, not what I think they should do. Because again, they never do the right thing. It's like George Costanza. They do the opposite of what they should be doing. So last thing I want to talk about on this podcast, change the subject a bit. Some of you may have noticed this if you just read some of the stories and you follow me on X, which if you don't follow me, I'm over 1 million followers now, but if you're not among them, definitely follow me because I put out a lot of good content on that platform. But I did post an article from Newsweek that picked up on a lawsuit that I filed this week against the IRS. Now, this is not, the big lawsuit to get damages for what they did to me in my bank, which I now have enough proof, even without the additional proof that I'm trying to get. But I think from the information I already have, I can prove that the IRS agents violated multiple constitutional rights of mine. They stepped beyond their legitimate authority and they interfered with the Puerto Rican regulators, with the OSIF commissioner, who had decided to approve the sale of my bank to Kenta. She told all of us that she supported it. It was a great deal. She thanked us all. We were on track for the sale. Now it's been more than 25 months since my bank has been in receivership, and not a single dime has been returned to the thousands of customers who have their deposits stuck there. All of this unnecessary. And none of it would have happened but for the interference of the IRS, who came down to Puerto Rico and somehow convinced or twisted the arm, I don't know, I don't have all the details yet, of the OSIF commissioner, and got her to change her mind. And instead of allowing the sale to the bank to be sold, which was in the best interest of everybody, all the customers, all the employees, me, Puerto Rico, everybody won from this sale, right? They were going to add a lot of capital, a lot of employees. The new CEO that they had hired had already quit her job at the bank she was working at and was a week away from moving to Puerto Rico to start running my bank. And it very smart cookie, MIT, Oxford, long time running banks. She was coming to Puerto Rico. She was almost there when they pulled the rug out from under us on June 30th, 2022, because the IRS somehow intimidated or whatever, coerced, convinced the OSIF commissioner to completely do a 180 and to basically create a pretense by misrepresenting a lot of key facts, pretending that the bank was insolvent, pretending it didn't have enough capital. Again, when I introduced the OSIF commissioner to the CEO and in-house counsel of Quinta in November of 2021, and the documents that we gave her, and we told her Quinta was going to add $7 million in capital as soon as they approved the change of control, which was like $3 million more than we needed. I said, I'll put the $7 million in today, right now, myself. I offered in front of the commissioner. And she said, that's not necessary. You got plenty of capital to operate the bank while we're reviewing the sale. And because the bank was losing so much money because of the false allegations of money laundering, I put almost $2 million in anyway, just to make sure that the capital that the bank had did not fall below the level it was at when the commissioner told everybody that we had enough capital. Then, out of the blue, 7 months later, she shuts down the bank because it doesn't have enough capital. And she retroactively rescinded the bank's license going back to January of that year, even though we had applied for it and paid the renewal. And they said, oh, we didn't renew your license because you didn't have enough capital. In January, when 2 months earlier, I said, I'll put in $7 million of capital. And she said, oh, you don't have to. And there wasn't one moment between that meeting and the June 30th announcement that they were shutting down the bank because we didn't have enough capital, where the regulators reached out to anyone at the bank and said, hey, you should put in more capital. See, normally what you do, if you don't have enough capital, they give you a letter that says, hey, you got to bring your capital up. You have 30 days, you have 60 days. If you don't do that, we're going to shut you down. We didn't get any of that. They told us we have all the capital we need, and the next thing you know, oh, we're shutting you down because you don't have enough capital. Now, of course, initially they said we were insolvent, which we weren't even close to being insolvent. So that just was a misrepresentation of the facts completely. But why did she do this? Well, again, I now know that it was a PR stunt for the IRS and the J5, because I found through one of my FOIA requests, my third or fourth one, that the IRS knew about and helped arrange the press conference more than 3 months before it occurred. And the press conference was dated to fall on the 4-year anniversary of the formation of the J5, right? So they could commemorate the occasion with some kind of enforcement success, because the only enforcement success they have is the action against my bank. But it was really a complete failure. But the reason they pressured the OSIF commissioner to shut down my bank is so they can pretend that their failed investigation was a success. Now, the IRS chief, Jim Lee, who is no longer the chief, he resigned and he's got a private sector job. So he parlayed that into some, a high-paying job. But what this guy did is he said, OSIF's decision was completely independent. We didn't participate in this. OSIF did the investigation themselves. OSIF decided to shut down this bank. We had nothing to do with it, but we just applaud, we want to stand behind her, which I always knew was BS, because she never would have thought about that, right? And of course, if they had nothing to do with it, why were they there? They had nothing to do with it. why did the press conference happen on the 4-year anniversary of the J5? What does OSIF care about the J5's anniversary? Why do they need to give them a present? And in fact, if the bank really was in dire straits, like she claimed, why did she wait 3 months, hold off 3 months, waiting for the anniversary of the J5 before taking this emergency measure? But I read a press release that I had it in my files and I hadn't read it closely. But the head of the HMRC in the UK, Simon York, he submitted a press release in which he specifically claimed credit for shutting down my bank as part of the J5. He said in his press release that Euro Pacific Bank was shut down for money laundering and tax evasion by the J5, which included the HMRC. So he specifically let the cat out of the bag. He said we were shut down because of the J5, but not because we were guilty, but to make it look like we were guilty because we ended up being innocent. They were all embarrassed. They leaked this information to the media, and then they ran all these articles about this big investigation of my bank and how I'm the mastermind of this giant tax evasion money laundering scheme. And it turned out that everyone at the bank, including me, was totally innocent. It was a complete waste of taxpayer money. But rather than admit the mistake, they said, you know what? Let's destroy the guy anyway. Let's destroy this bank. What happened initially is I think they leaked the information to the reporters about 7-8 months into the investigation because they knew that we were doing nothing wrong. So they said, we can't do anything about this bank because it's so compliant. Let's leak the investigation to the reporters and we'll destroy the bank in the media. And they almost succeeded, except I found a buyer. And so then when they found out that the bank was being sold, they had to screw that up too, and they concocted this plan and they somehow convinced the head of OSIF, maybe because they promised her something, they certainly all congratulated her, when the highlight of her career, the high point of her career was the press conference to shut down my bank. She had international attention for the first time in her career, right? So she got all these feathers in her cap for sacrificing the bank. Probably in her opinion, in her mind, it wasn't going to take, over 2 years. She was very insistent at the beginning that, the customers get their money back, right away, and that the whole liquidation process take 90 days. The reason it took so long is because her stupid plan that she allowed the IRS to convince her to orchestrate worked so well, right? The whole purpose of the press conference was to make an innocent bank look guilty, was to allow the head of the UK tax authority, allow the head of the Australian tax authorities to claim credit for shutting down my bank, to pretend my bank was helping criminals launder money and tax evasion, even though they all knew that it wasn't. Well, it worked so well that they scared the Portuguese government, and the Portuguese government put an 8-month freeze on the account while they did their own investigation. Now, I tried to get OSIF to publicly state, hey, you don't need to do this investigation. We already investigated them. They didn't do anything wrong. But I think she was operating under orders from the IRS to keep her mouth shut because she didn't want to say anything publicly to contradict the false narrative that was created by the press conference. The one thing that screwed up that press conference was the reporter, right? Because if it wasn't for this reporter asking this question, it wouldn't have come out. One reporter said, hey, was there any evidence that the bank helped the customers launder money or evade taxes? And she said, no, we didn't find any evidence of that. Now, that wasn't in the script. So she wasn't supposed to say that. That slipped out. Thank God. And of course, she actually was honest there. So at least I got to throw her a bone for that. When she was asked point blank, she knew that we didn't do that. So she said, no, we're shutting the bank down because it's insolvent, which of course it wasn't. And there was all this money that was waiting to come in. All she had to do is let it come in. And I had more buyers. If she didn't like Quinta, I had several other buyers. I thought Quinta was just the one that looked like it was the best fit. And so that's why I picked them. And she was very happy. But anyway, so what I did this week is I filed a lawsuit because I want to get all the internal correspondences between the IRS and OSIF, between the IRS agents and themselves, between the IRS agents and the agents in the Australia tax authority in the United Kingdom. I want to get any communications between the IRS and the reporters, specifically Charlotte Grieve, Nick McKenzie, Matthew Goldstein of the New York Times. I want to get all this stuff. I have a right to see all this stuff, and the government is not giving it to me. So the IRS agents are compounding their crime by covering it up. They're not giving me. And in fact, I mentioned I went over their FOIA requests. I got to one of my requests, I got about 250 pages that were responsive to my request, and they were all blank. They actually sent me in the mail blank pages rather than just telling me. They wasted taxpayer money to send me blank pages. But I'm glad they did that because at least I know the pages exist. Now they can't destroy them because they admitted they were there, but they redacted 100% of it. They said all of it was privileged. I couldn't see any of it. Well, I went to a lawyer who specializes in FOIA cases. He looked at my questions, and in fact, then he wrote another FOIA request, which was similarly denied with these type of exemptions. And he said that the IRS is wrong, that they are applying exemptions where they don't belong, that what they are citing as a reason why they don't have to give me what I'm asking for doesn't apply, and that I have an absolute right under the Freedom of Information Act to see these documents, right? And in fact, one of the things that Biden said when he was running, hey, we're going to be a wide open administration. We want to be open. We don't want to hide things. We want to make it easier for people to see what's going on in government. All right, well, yeah, here's an opportunity. But the IRS doesn't want me to see this because I'll get even more incriminating evidence that will give me even more evidence than I already have. I think I already have enough to completely prove this. I mean, anecdotally, I think I always had the proof of circumstantial evidence. Now I have real evidence, but now I want to get even more just from FOIA. So that's my lawsuit that I filed. It's to force the government. So now I have a judge, and I get to go to the judge and say, hey, you got to order the IRS to comply with this FOIA request because the exemptions they're citing don't apply, and they're just stalling. They're just trying to prevent me from seeing the information that I have a right to see. Anyway, that's it for today's podcast. Again, if you like it, give me the thumbs up, like it, comment. This is my final podcast from the summer vacation. The next time I'm speaking to you, I will be back on the job in my home in Puerto Rico. Bye for now.